What's up, everybody? Welcome to the 40 Finance channel. My name's Jeff Beers. Today I'm going to be talking about PayPal stock. PayPal is running at all-time highs right now as we enter into August of 2020. And the question here is this a buying opportunity? Will PayPal's momentum continue for the foreseeable future? And really, is this a good time to jump in the stock if you haven't bought in already? Or do we see a better time on the horizon and maybe wait and try to get our cost basis down? As always, my stock picks and projections are just my opinion for your entertainment. Please talk to a financial professional before taking on any risks in investing. However, if you do enjoy stock market analysis, going deep on stocks like PayPal, then please take a minute and subscribe to the 40 Finance channel. Thank you to everybody who has supported this channel so far. Alright, so if you haven't been following PayPal, they are on fire right now. Just came out with a huge earnings beat. And whereas some of the payment processor type stocks like Visa and Mastercard have felt a little bit of pain in certain sectors like travel, PayPal has come out of the COVID situation with all systems firing across the board. And we'll jump into the numbers much deeper here, but all in all, their Q2 eclipsed their Q4 of 2019, and obviously when you think about holiday shopping and e-commerce, it's pretty impressive that your Q2 would jump over Q4, and it basically was PayPal's best quarter ever. But what does that mean for investors who are looking to either get into PayPal, add to their shares, potentially sell to make a profit? That's kind of the discussion that I'll lead here today and just try to figure out from a valuation perspective, is it smart to buy PayPal stock while it's at all-time highs? All right, first let's take a look at the stock where it stands today. We got a price of $196.07. This was prior to the market opening. Got a P ratio right now of 89.98. And the 52-week range is $82 all the way up to $198. And you see off to the right-hand side, this is a one-year chart. And I put a little point there on the graph. On December 23rd of 2019, we're at $109. You can see the dip, the sort of COVID dip, if you will, that came in at March, and PayPal actually sank well under $100. Would have been a great buying opportunity for anyone at that point. And then Q1 earnings came out and they showed a nice little uptick with the world being on lockdown. And then Q2 earnings come out and here we go. We're up to 196. Looking at the top of the board, you got a forward PE of 57.14, trailing 12 months revenue almost 20 billion, 19.22 billion, cash on hand of 13 billion, debt load just under 10 billion. But one of the easy ways I like to eyeball debt, you can see that they have enough cash conceivably to pay off their debt if they wanted to. And whenever you're generating $20 billion in revenue, the $10 billion debt load I think is fair for a company that's growing. All right, so let's take a look at some basic valuation metrics to see how the valuation of PayPal has changed relative to the spike in the share price. Now, valuation metrics, they're always behind. It's easy to evaluate a stock and behind, right? But what I try to do is just see like, hey, what does this price mean today? What does $196 invested in PayPal mean today compared to some opportunities that we all would have had to buy the stock in the past? All right, so this board is a quarterly board, and it goes from the current situation all the way back 1 year to 3/31/2019. And I put that yellow bar straight down the middle there to indicate sort of the COVID boost, if you will, when things really started to change for PayPal. Important to note that the current column is just a little bit behind on Yahoo Finance. It's not real time like the slide prior. So you see the trailing PE here is at 121.84, but on the slide prior we were in the 90 range. So that's already falling, which would also indicate that the forward PE has probably dipped a little bit as well. Bottom line though, if we just go back to 6/30/20, which is our second column from the left, we're going to see trailing PE of 110.27, forward PE of 52.36, and it doesn't take a rocket scientist to look off to the right, and you can see that from a valuation standpoint, PayPal is conceivably twice as expensive than it was over the past several quarters. Going down to other metrics like price to sales and price to book, you basically have the same thing, right? You're in the 11s and 12s on those metrics. And really back, if you were looking at this stock on 3/31/20, those valuations were running about half of what we see today. So there's definitely been some markup. There's obviously some excitement in the market across the board, and PayPal, I would say, is in this momentum mode that we're seeing a lot of in the market, where it's just a hot name and it is definitely trading higher than it has in the past. All right, so it's very clear that PayPal's trading at a higher valuation than it was over the past few months. The question is though, is that valuation legitimate in the sense that there's much bigger things coming down the line for PayPal, and getting in today at a PE of 90, will that actually pay off in 3 to 5 years? So one of the things that I look at is always analysts' opinions. When it comes to analysts, there's a lot of hit or miss, there's a lot of opinions, and you sort of have to like trek through the noise, if you will, or get into the weeds and to see, whose opinion may I actually consider as legitimate. For that, I use TipRanks. I'm a paid subscriber. My affiliate link's below if you want to learn more about their platform and potentially support the channel. But TipRanks does a good job of organizing all the analysts' opinions and make it real easy to go in to say, hey, who are these Wall Street guys? What do they think about PayPal stock and every other stock on the board? So for PayPal, it's an interesting time to dig into TipRanks because obviously with earnings coming out recently, you have a flood of activity as the analysts pile in and take the earnings news and sort of project their future. And if you look off to the far left, it's honestly not super important even what these people's names are, right? We're just trying to get a high level look, and all of these guys and girls are 5-star analysts in the TipRanks system. So we gather that, hey, their performance is better than their peers. So that's at least worth something. Then when you get into the highlighted columns, analyst rating, you've got, mostly buys. You got 3 holds in there, mostly buys. And as you look at upside downside, which is the next highlighted column, we see that most analysts looking forward are in that kind of double-digit upside, right? That's sort of 10% plus. You've got a couple single digits in there of 7%, 8% price upside, and all of them have reiterated their guidance. And so that's important just because they have been following PayPal. They've obviously been bullish in the past, and they're coming out again and reiterating. So a pretty strong vote. So from a single share perspective, you're looking at $20 to $25 on PayPal's price is the projection over the next year. All right, so let's dig into the numbers from the earnings report. We know that they're good, right? Blah, blah, blah. What we're really trying to figure out is, are they sustainable? And that's the difference between a company that's having a good run versus a company that's going to have a long-term great future. So this is straight out of the investor relations page of PayPal. And it is a little bit of an eye chart, but I tried to color code it a little bit to make it easier to dissect together. You see at the very top, active accounts, it's in a blue square. And what I wanted to do for myself to kind of ground these numbers is talk about Q4 versus Q2. Q4 holiday shopping, e-commerce hotbed of activity. So let's take their best quarter of last year and compare to what we had in Q2 of this year. So active accounts, you got 305 million in Q4. That's risen by about 50 to 346 million. Now there's a catch though on this active accounts, and we'll get into that when we hit the yellow box when we're talking about net new active accounts. So in Q4, in the yellow box, 9.3 million net new active accounts in Q4. Now slide over and you can see in Q2 of 2020 we have 21.3 million net new active accounts. So 21.3 million net new active accounts is basically a substantial record for PayPal. If you look at Q1 right to the left, where they had 20.2, and I sort of circled that star, that's from the Honey acquisition. So I would say the Q1 20.2 net new active accounts is a little bit of a meh metric, not because it's bad news, but it's acquisition accounts, and I personally have trouble understanding how much of acquisition accounts really turn into customers. It's impossible to tell here today. Should have more information by the end of the year. But long story short on net new, you more than doubled net new active accounts than what you saw in Q4. So very positive sign. Looking at payment volume, Q4 to Q2, you've got basically a plus 10% increase in payment volume over their best quarter of last year. Then in that gray box, US total payment volume, you have 118 in Q4, 132 in Q2. So big lift. Then on international, you've got 80 in Q4, 89 in Q2. So again, everything across the board is big for this past quarter. And then the last box there at the bottom, transaction margin. This is always interesting because you have to worry about does more transactions start to cut into margin? But what we actually saw was at 56.6% in Q2. That beat all the numbers that are on this board. So a promising sign on margin. All right, so with such a big quarter during the pandemic, one that actually beat their holiday season, I start to wonder how much of this is good news and how much of this is situational behavior news that could actually roll back down. So growth being really good in the perfect conditions with stay at home and lockdown and all those things. Does that continue though when the world gets back to normal, say mid 2021 or thereabouts? Does PayPal's growth start to slow and then that's going to tank the stock because they're not crushing it anymore? It's something to think about. If you're long on this one, you're probably fine, but if you're trying to swing trade it or just do like a 1 year, you have to be concerned about a vaccine or a relative return to normal, because what will happen is these comp reports will start to falter a little bit, and that could bring the share price down some. Here on this one is kind of PayPal's thinking, right, of how this growth is going to continue. This is in the investor report. You can get it from their investor relations page. But what I really like is all the things that are laid out here. First of all, multimodal on the far left-hand side, multiple ways for people to use PayPal. That is super key. We know that Venmo has stuck pretty well, certainly with the younger generation. It does not make money by itself right now, but you can assume that user acquisition with Venmo is probably a pretty strong use case for that platform. Then you get into engaging users, and this isn't really something that I jump into in my personal life, these little games and, use the Honey app to save money and get points. That stuff doesn't really do much for me. But in this new world of gamification, and you think about Robinhood users and such, there's definitely value there. And if PayPal can acquire users through Honey, which is essentially online shopping coupon platform that sort of auto-magically, if you will, adds promo cards to carts and stuff. If they can use Honey and Venmo to bring in net new accounts and make it stick over to PayPal, that's a long-term game. And then finally, these enhanced in-app experiences off to the far right. This can work. You got to be with some pretty big partners though. You can't just do it with a onesie-twosie. You know, CVS I would consider to be a very big partner, multiple transactions in any given month for someone who shops there. All right, so obviously if you're thinking about investing in PayPal, you've got some other people on your mind too. You've got the Visas and Mastercards, the Squares. I grabbed this report from Argus Research to kind of put all those guys in one place so we can kind of see what is the projected future anyway of some of these payment operators compared to each other. The easiest way to look at this, quite honestly, is just ignore the scatter plot and move your eyes down to the bottom where we have real numbers. And this is where we stack up Visa, Mastercard, PayPal. I've done the little highlight there. And you can see in the second column, we've got a 5-year projected growth rate. And you see that Mastercard and Visa are neck and neck at 20%. PayPal comes in at 12%. Then you flip to the next column, current PE, and these numbers are a little different than what you'll see on Yahoo Finance, mostly because Argus is not publishing these things daily. But the bottom line, we got Visa with the lowest PE and PayPal, you know, a pretty significant step above the other two, especially since we know that their stock price has taken a run here lately, and that PE is more like 90 instead of 51. On the net margin side, big difference here. You know, you see Visa's getting 51% margin on their product offerings, Mastercard at 46, and PayPal down at 13. So a little different game. PayPal, you know, if you think about it, PayPal would have to have exponentially more transactions or partnership fees in order to hit the same amount of profit. And then finally on the right side, we've got earnings per share growth projected for 1 year. Visa at 15%, Mastercard at 22%, and PayPal coming in at 16.8%. So Mastercard, as you know, I cover them. They are considered the growth opportunity pretty much only because they're smaller than Visa. So there's a few more stones unturned, so to speak. Visa, however, I would consider the technology leader, and then PayPal sort of plays in its own space. Either way, in this growth world, you've got PayPal coming in at number 2 from Mastercard as far as projected earnings per share. Looking off to the right for a minute, this is like a sector comparison. To be honest, sector comparisons can be weird because you never know who people are counting in there. I know that Argus in particular puts several folks in, and some of them I don't always consider related. But you've got great ratings for PayPal when it comes to PE, price to sales, price to book, price to earnings growth, 5-year growth, and then debt to capital. They're a little light on the debt to capital side, but again, you never know what these sector and market comparisons, who's included in it. More than likely, if you did it yourself, you wouldn't have the same names as Argus. All right, so what does it all mean at the end of the day? Well, PayPal's at all-time highs, and the valuation for their stock is at all-time highs as well. So that's the bottom line. The question then becomes, does that really matter if you're investing, say, for 3 to 5 years? And if that's the case, I'm not sure that it does necessarily. I think that eventually on a 3 to 5 year cycle, you're going to win with PayPal. But I also don't know that it makes a lot of sense to buy in at all-time highs, especially with the instability in today's market with so many shiny objects with elections in China and you name it. You're probably any given day can shave 5 to 10% off any stock price on the market just when some stupid news headline comes out. So be leery of that. All right, point number 2, the way I see it right now, I think PayPal is going to kill Q3 and Q4. So we know what COVID has done for PayPal and the behavior change with customers. I don't see a whole lot of that behavior changing into Q3 and Q4, right? Like we've been waiting on the vaccine, we've been waiting on whatever good news to come out. It does not seem to be coming out. And while the world has reopened, our behavior is probably going to stay about the same over Q3, Q4, and you might as well throw Q1 of 2021 into that game. So I would expect PayPal's earnings to continue to crush it, given what we saw in Q2. The catch is the future, though. After the pandemic passes, they are going to struggle to comp on the same level. Doesn't mean they're not going to be profitable. It doesn't mean that they're going to go out of business. They're just going to struggle to maintain the massive growth rate. And that's where I think in the long future, call it a year or so, we could see PayPal get rocked a little bit in stock price as their earnings fail to compete with this COVID world. Of course, that sounds like bad news, but it could very well be one of the best times to get in, because if you have a missed comp next year in 2021 against the COVID behavior, then the stock will go down. You have an opportunity perhaps to lower your cost basis or buy into it. All right, so it was kind of interesting to have a PayPal video and not say a whole lot about Venmo. And the reason is, for me right now, Venmo doesn't generate any dollars. And PayPal's working on that. It's an excellent platform. I think it's phenomenal for user acquisition. And you saw the gamification slide and the things they're doing. They are thinking in the right way. And they are basically bleeding on Venmo in hopes of a bigger win in the future. It's exactly what you want to see with the company, particularly one that already has a profitable business unit with the traditional PayPal. Now they got this Venmo thing out here, and yeah, it's costing them money, but the hope is that they all transform together. We have yet to really see that play with PayPal, or their plans for that play, but I've seen everything come through the news, such as like business opportunities for small businesses to accept Venmo, where the business would pay the fee and Venmo's still free for the inherent user. We'll have to see how it works out, but right now, if you like Venmo, that's probably not the reason to buy PayPal. It could be a boost to their business down the road, but not today. You should be looking at the pure revenue play and think to yourself about the valuation of the stock as it stands. All right, so bottom line, in my opinion, PayPal, 110% hold right now. If you already own it, good job. You probably profited well. Hang on to it. It will go up over time. If you're not a holder, I'm interested in PayPal. It is on my list of considerations, though I've put a lot into Visa. But it's not irrational for me to think about having PayPal and Visa in this space, especially since PayPal has a little different user value proposition, I'd say, than Visa does. Nonetheless, if you're buying in for the first time, if you're hell-bent on buying today at 196, then I would buy small and expect to lower your cost basis over the next 12 to 18 months for a 5-year long haul. Or for my world, I'm just going to wait for the next version of market volatility and try to get it at 150 or under. Not really sure if that will happen, but that is a number that I'd feel much better with as opposed to 200. I'm not saying that PayPal has bad news that lowers the stock price to 150. I'm saying that the broad market, the volatility that I feel like we should at least be facing heading around election time, could create that actual buying opportunity where you can slice a little bit of cost off this one. So if you're anxious, go ahead, buy today. If you're going to hold for 5 years, I don't think there's anything wrong with that. But you may be surprised to see if the market has a broad downturn due to COVID, election, schools going back, sports not playing, then you can probably shave a couple bucks off here. All right, guys, that's my take on PayPal stock at all-time highs. Hope you enjoyed it. Please let me know in the comments. As always, give me a like and subscribe if you enjoy this content. See you on the next video.